Okay, good morning, and you're welcome back to our trading channel. This is Speech Trading Flow, and it's Wednesday live recap once again. And this morning, I'm going to be sharing with us kind of last week market review. Everything that we did in market last week. How we were able to profitably trade the forex market and make some good amount of profit from it. So I'm still going to be sharing how we took those entries, right? What we saw that actually motivated every entry we took in our last week trades. Remember, we trade the smart money concept. So as a smart money trader, I wanted to really sit back, relax, look into the chart with me, as a brief recap, as I do my brief recap for the week. So first and foremost, I will point out a few of the trades that I took last week Wednesday while I was in our live session. So I shared some of my trades with us. I think those trades were already running trades while we were waiting for some other ones. Like I shared my analysis on gold, I shared my analysis on BTC USD, and I also shared my analysis on GBP USD. So I shared with us why I expected the market to do what I was expecting it to do, and how I was going to counterlize on it. So quickly, I'll just go down back to GBP USD because that's what I want to do. So I'll be sharing from last week everything I traded on GBP USD, everything I traded on BTC USD, and everything I traded on gold. So starting with GBP USD, so this was a trade for last week Wednesday. We spotted an opportunity here while the market was actually pulling down, and gave us this low here, and was beginning to buy up again. So we looked at this as a liquidity point that price should actually come and sweep, then get us into this particular buy move here after taking this fair value gap into this other block. But as at that day, which was on Wednesday, price didn't come back down there. And as at 12 in the afternoon, which was the New York session, close to the New York session, the price gave us this other opportunity by providing this other block here after breaking this structure to the upside, gave us another block and a fair value gap here. So we had a very clean tap into that zone, and the price continued to move up, giving us some level of highs here that are being formed still on Wednesday. I think New York session properly formed this high, and on Thursday London session formed this high also, and New York session took out this high. That's we were stopped out of this trade here on Thursday afternoon. This would have given us a 1:7, but after giving us some around 1:4 thereabouts, yeah, 1:4.4. So still a good trade there before we got stopped out. So we were stopped out at some good risk reward there, but we couldn't take the whole expectation, right? Price didn't give us everything, but it gave us something good before it went against our direction. So this was GBP USD, and GBP USD began to sell ever since, and it is still selling till now. So there are some sales I counteralized on for GBP USD, but I'll be sharing them. They are not on this particular chart, so I'll be sharing my other charts for us to see how I was able to counterlize on GBP USD last week and even yesterday. So I'm going to be sharing that. So for this particular trading setup, we had this was the setup here. This was on Wednesday last week, and we were waiting for price to give it to us, right? We're waiting for price to give it to us here, and we couldn't get into the market here because it didn't tap into a fair value gap, sweep out the liquidities we were expecting. But price gave it to us here, so this was the before of that trade, but couldn't give it to us at the top here. So this was that particular setup, and I published this on July 9th, right? On the 9th of July. So this was that. And this trade, we had some other setup, right? This particular one on gold. Now, this one of setup I shared. If you go to my last week video, right? In our last week video, I talked about this particular setup on gold, right? I told us that, oh, okay, this is a liquidity point that gold has swept after coming down into this strong zone here, right? That's a very major zone for me on 4 hours. After gold approached that 4 hour zone, and I was able to share with us that, okay, we have seen some level of liquidity sweep down here. This will give us a change of character, and the change of character here will mean that price is coming to take out all these trend line liquidities here into this zone upward, and to zones above. But for the sake of the class, I was going to be taking this little risk reward ratio, but other times I could take higher ratios there. And so many of my students, few of my students were able to counterlize on this particular trade, and the one that ensued after this high year, because we had that price went up, and on getting to that place, gave some reactions downward, came for an inducement on this same 15 minutes time frame, right? We had some 15 minutes time frame or 5 minutes time frame inducement, and we know what happens after price induces. Price seeks to go higher whenever it takes an inducement. It actually seeks to go higher. So we saw price move higher. So this was the ending of that particular trade. And so we on gold we saw this. So this is what we got on gold here. It was a setup, and that particular setup I've just shared with us. So this is what we got on gold. It was the actual setup. I showed us this sale last week, right before this buy came up. So this was the zone I was expecting it to buy from. So many good trades last week on gold. So this is the level there. So it was a strong level there, and I could remember telling us about this level and also this level that price didn't get to. I was planning to take a very long sell from this level, but price didn't get there. If you see another of my video, you see me talk about this level. I think from 3 weeks back or 4 weeks back, I talked about this level, taking a very good buy from there into the higher zones there. So price didn't get there, but price has gotten to this place, and that's actually a good thing. And we are seeing price trying to return downwards today. So there are some other trades that I will tell you about here, and even here yesterday, some counterlies on this place and on this particular trade on Monday. So I'll be sharing this setup, like I'll be sharing the trade review for that as we go. But so these are the major trades of last week, and then finally we have Bitcoin trade that was so amazing, the most amazing trade of last week. I had Bitcoin to be my most amazing trade for last week, and this was the setup here. I was able to show us that, oh, I am already in this trade, and this is what I'm expecting, that, oh, Bitcoin is going to take the highs here, right, and even move higher. But I just want to take this little risk reward ratio. This is about 1:6, thereabout. So this was the opening of that trade, and a few hours into that trade, and let's check it up on the charts. And this is BTC. I shared all this in my videos last week, so if you have not been following, this is the right time to follow, because I may as well share some of it again today. I may or I may not. So this was the trade while I was, oh sorry, it was up to this point. So this was around the 1:14. Let's go check it up. Let's check it up. So this was it. Having some risk reward there. The stop loss was under here. Yes, I remember. So this around 1:6, 1:7, thereabout. So this was that particular trade, and I was able to share it up with us yesterday. Sorry, last week. So this was the trade I shared with us last week, and I told us how that Bitcoin was going to fly up, 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 up. And what did we see? We see this movement to the upside, and Bitcoin did actually not stop. Actually, it didn't stop. I was able to counterlize on this sell a few days back. I'm going to show you how I was able to get this sell, and I am actually expecting a buy. I have a setup for a buy around here today, which I'm really, really expecting to play out. I'll be seeing a change of character here, because liquidity is actually swept here. We have liquidity taken out here, and we want to see. It's not weak rejection, it's actually a liquidity sweep. So we have the major liquidity sweep there, and we hope to see a change of character on this time frame here. And after that happens, there are still some other liquidity that price may want to come and take here. This is a zone that price has created, but it's a very steep zone. So, well, I will be looking at taking my trades around this region here. I will want to use here as inducement. If it gives me, I am going in for it. So I want to use here as my inducement. This is another trade I am actually waiting to see play out today. So if I use this as my inducement, I can check how the market momentum is going. Right now, the upward momentum is very, very, very low, because Bitcoin has actually taken some sell posture since yesterday. So the upward momentum is low, but I can still risk it up. So this should be my fair value gap, and I'll be taking my fair value, my trade halfway into my fair value gap. So, oh, why not? I could take my trade from here, and my stop loss just a little below the zone, and my take profits. This coin is still buying. I put above the zone here, um, at, at that high there. So this is another 1 is to 5.99. Call it 1 is to 6. Let us, so 1 is to 6. So this is actually another nice setup that we could capitalize on this Wednesday. That's today being Wednesday. If we see anything break above this place and comes back to give us a proper tap into the zone, we are actually going for it. There are some other times that I may not see the price break above this place, right? But I could just see price come and tap, and if I see the momentum is very good, I could follow it, because I can tell you that this is what happened last week actually. There was a place I was waiting for price to come break and tap into, but price actually did not give me that. The Bitcoin is fond of doing that. Look at this zone. I was actually waiting for price to break that zone and come and tap, right? Give me a proper break of structure, then a well-defined order block, and come back to this order block before I buy. So this is, I was actually having it in mind like this. Okay, break this structure. At the break of structure, I have this to be a valid order block now, so I could buy from here. But on the contrary, I looked at it and I said, "No, Bitcoin is fond of doing something. You know, it pretends to respect a high, come to the block that is at that at the low, right? Then it uses that block that is premature for its break, right? It uses it to push. It uses a premature order block as it was as its demand zone. So I have seen that happen again and again and again in the markets. That's this Bitcoin particular thing. So when I saw this last week, I didn't hesitate, because I already know out of experience, out of backtesting, that Bitcoin behaves like this. So I didn't have a problem taking that particular trade. But should it be that I didn't take that trade, like if I didn't take it here, then this would have been another opportunity for me to do it, right? Okay, so this was the block that was broken there, and if that's the broken block, this would be my other block here. And if that is actually my other block, this would be my inducement, because we have a valid pullback here. This would have been my inducement should I have not taken this particular opportunity last week. So this would have been the next opportunity for me to capitalize on. So on this regard, my entry would have been just here, fair value gap, and my stop loss would have been below the zone, here, and my take profits too would actually be uh, above, just the same place, about the same place where this one is. So I would be seeing a 1 is to 7.9, while this one is a 1 is to 7.4. So you can see that it is just a repetitive pattern we use for trading, a single kind of entry pattern. And we want to see this happen over and over again. And I keep teaching. If you check some of other of my videos, I teach you about pullback, I teach you about inducement, I teach you about break of structure, which of break of structure is valid, because that's what we use every day in the markets. That's our smart money concept. It is easy, it is relatable, it is repetitive, it happens every day in the market if you can actually spot it. So this is how I was able to spot that trade on GBP. So let me show you how I was able to spot the same trade on gold. On gold, what did I see last week that prompted this particular buy move? I think I explained it in the other video, but I don't have problem explaining it to you again. So this is it. We have this movement to the downside here, right? We have this movement to the downside. Then we're actually waiting for price to give us a break of structure here, but price did not do that. Rather, it gave us a new low and yet another new low, right? Then coming to sweep it, we know one thing about gold. Gold, we actually want to do the the deepest of pullback, right? Even when you know that it is actually not supposed to go below again, right? It wants to do that. So one way I trade gold is this: is that I see a proper change of character, which is from a POI, right? A well-defined POI. The first violation should give me a change of character. So what did we get here? We got a simile violation here. We got a simile violation here after gold have swept all the structures, right? Formed some levels there to take the retail traders. People call this, oh, this is support level, let's go buy in, let's this, let's that, this is a double bottom, let's buy it up because it's a double bottom, and give them a neck here and everything and all that and all that. Well, that's for the retail trading pattern. But coming down here, what did we actually see in the market? After gold has formed this two level, we saw that it came to haunt it. And that's my first call to action. Once I see liquidity sweep, right, on a POI, I usually want to take good, you know, good record of that particular thing that have happened there, that particular liquidity sweep that I see on the chart. I usually, it calls my attention. So seeing this, I know my attention is now fixed on this. So what was the next thing I see? I saw a very quick run to the upside, giving us a proper break. And then looking at this became the zone of interest. So while price returned to it, I was really, really interested in buying, and I bought it at that point there, taking it up. Should it be that I didn't buy it here, where would the next place I'd like to buy this particular gold? I would like to buy this market, after price finally broke this structure, gave us a proper break. And where is my order block? Where would my order block be? Would I actually take this one down here as my order block and my fair value gap? Well, I could take that. Or I think there's a pattern I drew for liquidity sweep. I keep teaching one thing about liquidity sweep. If you see liquidity sweep on higher time frame, there's a way you treat it. You don't expect price to actually come back down, 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 down again. Why? Because liquidity has been swept on your higher time frame. There is a strong rejection there. It's a strong rejection. Once price has rejected on the higher time frame, you may likely not get it come back to that zone where you want it again on your lower time frame. Why? Because it has swept all the liquidity there on higher time frame. So the intention that price has next is to just run away. So we see it there into the zone. We have our first rejection, we have second rejection. Look at this sweep of all these levels. So we have it that price won't come down, 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 down here again. It will just come and mitigate a little of this weak rejection and run away. So for that reason, when I trade such zones, I usually don't look for too much of mitigations. I just look for a good zone to jump into my trade, and once I see it, I get in. So this was one trade of the week, and this is the other one that ensued on Thursday. After this zone was actually broken, we had a break of structure above this zone here, and these are some lows that price created. Now, if this is a high, this is actually a pullback here, a valid pullback that price actually made, and went up again. We have so many liquidity sweeps, but looking at this, for me, this kind of a movement holds a lot of stories, like it holds a lot of significance. Why? Because liquidity has actually been swept here and price actually moved higher. So if I was actually marking structure, I want to mark this place as a very important zone, a zone that swept liquidity and was able to break higher, right? A zone that was able to sweep liquidity and it was able to also break higher. Then, if that be the case, I'm looking for how to take trades just either at that point, at this point here, or somewhere below it, which we have our good order block here for the buy. But I was also still looking at all these liquidity zones here that had to be swept, right? So the buy was really, really taken around this place with some stop losses here. I didn't actually take this buy, but I was just looking at it, and some of my students were able to figure it out, and they took it. I was still rejoicing from this last buy here. The market was really choppy for me. So, but I really expected this buy to continue until we got to some zones higher and above this place. I was really looking at least exiting this other buy around this particular buy was slated for this zone. So I didn't see any reason to take any further buy. So looking at this, we had all these movements upward as some 1 to 3 point some stuffs there, and then this sell and then this other sell. I'm going to be relating it to us very soon. I was able to get this, but how did I get into my GBP USD trade? It is just one simple repetitive pattern. It's very, very simple. If you still don't understand my on so on GBP USD, what did I actually see that prompted this particular buy? So I saw price run into this zone. This is a high time frame zone also from far behind, and knowing that this is actually a sweep here, you know, some heavy rejections on the 4 hours, I knew that price was not actually going to uh so this was it on 4 hours here. And so I knew price was actually not just going to come back into the zone quickly, right? It was not going to stay there. It was just going to run away because of this long sweep we had here on 4 hours. And that's some secret of my trading principle. So what did I do next? I just knew how to counterlize on it on the lower time frame, because you actually don't want to wait for too long before you take that particular trade there. So that's how you go about it. And then, so in this case, I had my setup there, not waiting for price to come down, 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 but just around this other block here. And that's being done. What's the next thing we see? We saw that price actually did not come to mitigate the other block, and that's what was almost expected. That's part of the expectation. We usually do expect price to, in after a very big liquidity sweep, we don't expect price to come down, 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 because in real sense, for price to have swept the liquidity downward means that it wants to reverse and run in the opposite direction. So you don't expect to see some real mitigation after price has stolen all the liquidity it wants to take in the zone, and it's actually running away. So that's why we didn't see price run down into this zone. But much later, we saw price coming to mitigate the last low it created here, right? It came to mitigate that last low it created there, and we could have also counteralized on this particular one, but for some reasons we didn't. And I think we're not around. This was during this happens during uh, the Asian session, and Asian session for me is not the best time to take any trades at all, or to want to set any entry patterns or any other block around the Asian session. It's actually not a nice one for me, because I know that in most cases the Asian session gets raided by the London opening or the Frankfurt, whichever one goes, right? Whatever sells his boots. So I don't usually want to take any setup around the Asian session. But beyond it, now this was the London Open thereabouts, close to the London Open. So it's actually nice to frame entries around there after all liquidities have been taken. So this gave us this nice bite to the upside, but we didn't get to our take profit, but something good was already taken from market, and we could also continue with that. And that was that. So into our setups for this week, as I'm going to be reviewing on Monday's trade and on Tuesday's trade, which was yesterday. Today is Wednesday. I have actually not taken any setup today. It is still very early, and we are still looking at, like I said, we are still looking at BTC for the buy, and BTC has been on the crazy buy since last week. It has gotten to an all-time high and is actually rejecting from there. We may be able to see another opportunity to continue with the market to the upside, uh, but for now we are still waiting, and this is what we are actually waiting to see. Could it be that it doesn't happen the way we are expecting it? Could it break to the upside and give us any reason to want to take out another zone here? Then we are actually gonna follow it up. But should it give us exactly what we are looking for? That is to say, no, I'm not a trend line trader. This is actually not a trend line. I'm not waiting to buy from this. I'm only saying that, okay, while some others are waiting to see price tap on this trend line to take their buys, I'm actually waiting for price to liquidate this trend line here. After breaking this structure, taking out the early sellers of yesterday. Some people sold this trade down here. So taking out the early sellers of yesterday, I am actually waiting for price to give another liquidation for everybody that's been the early buyers here. Give some liquidation down into this zone. And I'm not expecting it to go down, because that's beyond this, because it had actually given so many rejections from here and has broken it, which indicates that all liquidity here has been swept. Though if you check on higher time frame, there are still many liquidities below that price may actually want to take, But looking at price, take out this whole liquidity here. I think this is enough reason why price should be able to break structure to the upside again, because Bitcoin is on a very heavy bullish rally as at the moment. So that is why I'm actually taking this particular setup. I'm looking at this particular setup, and I'm going to be taking this setup on my FTMO account, right? It's $100,000 FTMO account. So when I do that, I'm going to be sharing it up for us to see. And yes, my yesterday's setup on GBP USD, I also took that on my $100,000 FTMO account, and I am going to be sharing us the updates, like how it actually went, in few minutes. Sure. So I am going to be sharing my trades for this week, starting from on Monday, and then on Tuesday, and maybe some other trades I took without sharing in the first aspect of this video. So I'm going to be starting from gold, right? So I saw how that gold has given some good buys into the upside on higher time frame, and we saw this particular rejection here, having gone up, came back, gave a structure break to this place, but give us some full-time weak rejections here. And that only means that gold is gonna be pushing to the downside after giving us this long buy, having so many liquidities here to wipe. So as a smart money trader, how do we counterlize on this? Do we just jump into the market? Of course not. We have to wait for we have to wait to see some level of liquidity sweeps there before we take advantage of it, right? So we have to wait to see some level of liquidity sweep there before we try to take advantage of this setup. But mainly, what do we look at? So here we're able to take some good trades. That's a good one is to three, but we were able to counterlize on it for lower time frame. I think even better on the 5 minutes perspective of things, and you see it more clearly there. So here is where we had our gold here, and so we saw gold break above this region here, and so we saw gold break above this region here, and that's this particular region here. On seeing this gave us a sweep, and this is a violation of structure to the downside, right? So gold violated structure to the downside at around this particular point here. So at this point, gold already violated structure to the downside. So our minds are already set up for the sell. So where is it that we want to take our sell? Where is it that we want to take the advantage of this price violation? We want to actually take it on this particular block here, this particular one here, right? This was the last place that this was the last order block here. This order block is a valid order block. It actually has a fair value gap. It actually created a breaking structure. It actually has a momentum push and some other stuff. So I'm not going to talk about here on this particular video. I'll teach those two other stuff in my mentorship there. So this becomes a very valid zone for us to seek some selling pressure from gold. And when we see that, when we saw that, we're able to counterlize on it by putting our sell here and putting our stop loss above the level, and we expected gold to come minimum to this zone here, down here. And what did we see? It actually got there, and even to the other level we expecting it to sell to, by grabbing every single liquidity it created uh, on its way down. Every single sorry On its way up, every single liquidity it's created here. Look at this zone was the first target. Why? Because we had a kind of a triple bottom here, right? uh Equal lows here, and we know that price will always want to eradicate any equal lows that it has actually created. Why? Because you have retail traders liquidity, retail traders stop loss. Many of them will enter their trades there and want to put their stop loss maybe below this other zone. So you see price taking out this zone, taking out the other place, and coming down to even this last zone. So for the trade, we exited here, but for the main setup, this was the first target. And once that has happened, we look to continue this sell. And if we are to continue this sell, we have some points that we could call our inducement. At this point, this became our inducement high, because we know price has changed structure to the downside on major time frame here. So we already have a major time frame change of structure to the downside, and this simply means that we have a change of character here. And for that reason, we are looking for more opportunities to sell short this market, to sell it downward. And for that reason, these are inducements, right? These are valid pullback here, although we have another one here, but we choose this for inducements, and these are inducement high. That is to say, the moment price comes to take our inducement high, we will be looking for more opportunities to sell the market. And why am I taking this as my inducement high and not this? Now that's because the liquidities that are there to sweep, this liquidity and this high and this high, they are very close to each other, right? So they can form a liquidity zone that the market is going to take on lower time frame. So I don't want to use a liquidity zone as my inducement when there is a better inducement above, right? So price can sweep out this zone and use this one as the main inducement, right? So this one could just be a snack, right? So anyway, we see price. What do we see price do? From this low, price took out all this and traded above this. Now, where were we expecting structure to continue? By order flow, we expecting structure to continue from this particular zone here. Let me show it to us. By order flow, we're expecting structure to continue from by order flow, we're expecting structure to continue from there, and exactly that was what we got. But by the time you try to see how you can actually refine your order flow, you see that this is the exact point we could expect price to continue from within this bearish order flow that is already ensuing here, right? So this was the last bullish structure here, and coming down from the bullish structure, this is the only unmitigated point within this bullish move there. So that forms a bearish order flow for the continuation. So I was actually waiting to see the continuation there, but I didn't. But how was I able to know that we will get a nice continuation from here? Well, it is the same tactics. You just, sorry for that. You always want to pay attention to the market. The market is like a continuous music, right? It's a continuous music that has pauses and plays. So when it pauses, you just want to pause with it, and when it plays, you want to go along with it. So look at this. This was the highest point that price formed on this place, but before then, it gave this low. This is not a valid low. I'm not going to take it as a valid low. Okay, only at this point. So this point became a valid low. This is not a valid pullback until this high was broken. This became our prominent candle, as I will always teach. So this became our prominent candle. The low of the prominent candle was broken. So this became a valid pullback. So this became a valid pullback here, right? So for price to actually make a valid pullback, traded higher here and began to reject on this zone. If you go higher time frame, you see the rejections on that zone took a whole lot of time, right? So that alone tells us that okay, price is willing to do something funny there. And what did we get? Though this is a sweep below zone, but it really at this point here in a downtrend, when you see a sweep here, you shouldn't just take it that oh, price wants to go higher. Price has actually gone the highest point it can actually go, right? Because it's actually a downtrend on the higher time frame. Check out, this is 5 minutes. So if you check it out on 1 hour, you're going to see that the price is actually bearish. So once we see that happening, we know what we are looking for in the market. We are looking for every opportunity to sell this market. So even this kind of stuff here becomes an opportunity for us to sell the market, right? Breaking below this structure, even weak rejections, right? Yeah, we understand that it is actually weak rejection here, but it is still forming an opportunity we can capitalize on in trading this particular market here. So that being done, that being said and done, if this becomes a rejection that we are looking at and not this one, though this one has given us a preliminary structural move to the downside, this is the break of structure, came here, swept liquidity and traded lower. So we are just looking for the next opportunity to join the sell here. So in that case, which opportunity has been presented to us here, and what do we do? We're gonna put in our sell, and sometimes you want to keep structure above zones and take profits at the immediate low or somewhere lower into this zone. So as the main expectation there. So looking at this, we got a very nice trade there, 1:9, and we did not just take this one alone, right? This was not everything we took. There were still many other opportunities we took on gold. We took this particular sell here, this one here. Why? Because we saw that everything has been mitigated at this particular point. This was yesterday's CPI. This was yesterday's CPI. So exactly 130. So we saw that price has actually mitigated all this liquidity it created on its way down here. Every single liquidity it created on its way down here, right? It has actually mitigated it with CPI news yesterday. So what does that simply mean to us? Price has nothing it wants to go and do up there. So it is still moving downward. So where is the exact place on this downward movement that we could counterlize on this trade? There are 2 points we could do that. So that we do this on so that we do it on the weak rejection, right? Or we do it on the order block that is already formed here. But yesterday's trade was done on the order block. I actually didn't take it, but some of my students did, and they were able to make good profits from that. So this trade was taken here on that particular order block yesterday. Reason being that there are some mitigations that we already see above these blocks here. These blocks here has been mitigated. Like this one is already mitigated by this, and this one already mitigated by this. So I always teach dynamism of order blocks, right? In POI selection, where you select your point of interest. If an order block is your point of interest, there is something called dynamism of order blocks. I always teach that to my students. So dynamism of order blocks will have me not select this as my POI anymore, because this has been invalidated by this, and this one also have been invalidated by this. So the worst that can happen is that if this doesn't serve as the POI that market should take, right? Then each and every one of them should serve as liquidity. That's one of my secret law, but I can give you that for free. If you want to understand that more, you can come into my DM and we're going to show you that how market does that. Okay, so okay, without wasting any time, I will show us what actually happened and what I am actually expecting on gold, although it's actually not playing out as we speak, but I still expect it to play out. So, having taken all these cells into the lower time frame structure, there is this zone I have been waiting for price to come and mitigate for the buy, right? So, this is my refined zone. If you check it on 4 hours, that's a very good zone there for buying gold. And I was talking about this zone to my student last week. I'm waiting for this particular order block, and price has actually gotten there. And sorry, so this is the particular order block. Price has actually mitigated the other block, a very slim mitigation with a very big rejection to the buy side. Yeah, understandable, but I don't still want to jump in. I still expect many activities around that region, right? Many activities around that region. I know price should buy, but there are still many activities. If it should start buying, there are still many activities you want to do. It want to grab some liquidities, take time to stretch itself and shake itself, shake out some people, get some people in, and then it does the magical buy. But for now, I am not taking this buy, because when I do, I'm going to be taking it for a long term back to this zone here, right? I'm going to be buying it from this particular region back into that zone up there. So I want to be very, very, very patient with this buy, and so I want to see it, come here and grab all this particular liquidity down there. This is 15 minutes time frame. So there's something I say to my students when I trade. I tell them, okay, you have to give on your lower time frame. When you do your high time frame analysis, you give structure precedence, right? So you want to give structure and PI, but when it comes to lower time frame, well, you want to give liquidity precedence before structure, right? So you look out for liquidities, then you mark your structures. You know that when price chases liquidity, it's going to violate structure and come back to be your lower time frame structure again, but it's going to give precedence to liquidity before structure. So don't go about trying to mark structure. The way I do, I thought of the new paradigm, right, of marking structure where you have your inducement, change of character, lower lows, lower highs, and so many rules thereabouts that helps you to mark structure properly as a smart money trader. But when you do that, you should do it on a higher time frame, right? But when you come to a lower time frame and you mark structures, you always want to give liquidity precedence. You always want to respect liquidity first before you talk about structure, lower time frame. And if you don't put these things in the order that it should be in their hierarchy, then you are going to be missing so many trades. You're going to be getting stopped out of many trades. So this was the yesterday's trade for gold. So this was some screenshots I made from those trades. Right. Okay. This was for Monday. Monday's gold. Right. This was for Monday's gold. This was the sell, and this was the TP. Was TP hit and far below that zone coming down there. Okay, this was for GBP USD GU, right? I'm going to show us why I took this trade here. So on GU, we saw price coming down to the downside already, so we already convinced that this is selling market, and we knew that the dollar itself has been strong for some days, so there's actually no that particular market. So in that case, what did we do? We just went on our lower time frame. We looked for the first violation, of which this happens to be the first violation here on our lower time frame, right? This was a pullback, a valid pullback to the upside, broke structure up, then came, violated it. Yeah, so that gave us a good idea of what price wanted to do. And price trading higher again with a very good weak rejection. Wow, this is a go for us. So when it does that, came, violated all this place, cleared all this liquidity, and this was where we finally decided to enter into this trade. When price broke this level again to the downside. So I actually came late into this trade, few pips late, very tiny pip late. So less than one pip late anyway. So this is where I wanted to take this trade, but then I was contemplating. And when market began to run, I jumped in here, stop me to wait again for it to mitigate this place. So this is more like a flip entry kind of trade. This is a flip entry kind of trade. Reason being that initially this was a strong demand zone here that price created. Let me see if I could just, okay, so this was a strong demand zone around here that price created. So this was a strong demand zone, but what did we get after the demand zone? Let me use this. So this is a strong demand zone that price created and used it to break structure to the upside. So here, so price created demand zone, used it to break structure to the upside. But now when price began to come back, this zone trying to reject price, it couldn't reject price again, right? So there was another demand here that was not totally valid, right? This demand actually failed here. This demand was able to sweep some structure up here, right? But this demand actually failed here. When it came back to this place, it failed, right? So here is the particular supply zone that killed it. This is the supply zone that killed it. So it simply means that we can take trades around the supply zone. That will give us flip entry. So in flip entry, the law is this: if you have price going up, now this was the last demand zone that was created. When price comes down, if this demand zone tries to push price up and it fails, right, then that zone is taken. Now where do you look to enter your sell? The particular place, that the particular supply that destroyed this demand is your sell zone. So once price comes back to that zone, you are looking for an opportunity to sell shorts here. So that was what actually happened here. So this zone was where price actually destroyed this, and we used it for our sell, right? So it's just S to this, supply turns demand or demand turns supply, and all that is just flip entry. I don't do too much of flip entry, but I decided to do that. And flip entry is one entry that works many times when flip entry is one entry that works. So this was the GBP USD and this was BTC USD for last week. This was the setup on BTC USD, and we were not able to counterlize on this particular setup because price only came very close to our entry. Price came around this high here and did not mitigate our zone. We wanted to see mitigation to this zone, then it sell to the downside, but price actually did not do that. Price almost gave it to us, but it actually did not. So we couldn't take this sell. but there are consequent sales we took on GBP USD. And so for this one, this was the GBP USD we're talking about, GBP USD, and this was our first sell, and this was the second sell. Now this particular sell was taken yesterday. This particular sell was taken yesterday as a continuation for on Monday's sell, and as a continuation for on Monday's sale. And what did we actually get on that? We actually saw how price gave us this, but because of CPI yesterday, we got stopped out. Because of CPI yesterday, we got stopped out here, just a tiny. So a tiny move to the upside stopped us out there and ran down and even lower. So that is what actually happened to us yesterday for the second trade here, this second trade. So price was manipulated. And how did I know that that was a manipulation? Yesterday we had CPI, and we know one thing about CPI. The expectations that we had from the market yesterday, let me show it to us. I think I can do that. So this was Tuesday, yesterday, yes. So we had CPI yesterday, and what did we get? Everything coming out positive except the monthly CPI, but manufacturing sales was properly good. CPI, yearly CPI was better, and Empire State's Manufacturing Index was beautiful. And this one that should have been negative was just, was just there. Not so. We had CPI yesterday. Okay, so we had CPI yesterday come out as this. Everything was actually good, but what we were surprised to see was that the movement of the XY, instead of going positive yesterday, first gave a big negative push. Yeah, so the XY gave a very big negative push yesterday, first and foremost, of which I was expecting it to come and clear out this liquidity. But looking at what the outcome of CPI would be, I knew it was going to be positive. But some manipulations actually ensued here yesterday on this particular point. So we had some manipulations around here yesterday, which was used for clearing out all these zones, all those zones there, right? So this was the XY's behavior yesterday for CPI, and it was actually not expected to be this way. This was not the expected outcome. So we saw that even at that, the movement was still a positive movement. It had a jump to the downside at the release of CPI, then straight up, and that led to us being taken out of this particular trade on GBP USD yesterday. So look at exactly what price did as a result of that jump. So price was able to just sweep us out with a very, very, very tiny, tiny, tiny level of rejection there, and that was what we got yesterday. And then finally, onto the downside, we had some trades on gold. I think I have explained all that initially. So I have done all those explanation on then on BTC, right? So we got one trade on BTC also that didn't give us, right? We couldn't enter in, just very, very, very close to that zone there. And then finally, our expectation for the week for BTC, okay, it is finally playing out. So we have a good change of character to the upside on BTC. We know that BTC is still for the buy. So what am I expecting to see? Just some liquidity drags here. I expect to see some liquidity being dragged, because this is actually a good trend line for markets to take. Or if not this, we could call it this. Yeah. So I'm looking at that then. I'm looking to buy at this zone here.
I'm looking to buy at this zone here, and this will be my fair value gap. I think I've drawn this structure earlier in this video. It's my fair value gap, and my buy entry should be around this region here. Stop loss below zone. Take profits above the initial high for BTC to gain some newer price levels that it has never gone to anytime before. So that is my analysis for the week. So I will still be making another video next week, most probably a lecture, a proper lecture video, on how to trade like this and to remain profitable. And I will still give updates on my trading, like everything I do on my FTMO account. So stay hooked up. Watch out for the next episode of our trade. Watch out for our highlights and everything. We remain Pitch Trading Flow. Nobody does it better. So please like, subscribe, share these videos. See you in the next live videos.